So much for tuning into Talking Point. I'm your host, Niraj Shah. Guest today is Vikas Khemani of Carnelian. Vikas, great having you. Thanks so much for taking the time out and joining us today.
Neeraj, pleasure entirely mine. It's always good to chat with you.
Thank you so much. Because it's an interesting time. Markets are at all-time highs. Global markets are now starting to participate. Portfolios, though, not quite there. Most people are saying that, hey, our portfolios are not doing well, even if the market is at high. How do you gauge this landscape?
So I think, first of all, most people in the recent past have been very, very bearish and non-believer in the market. I think the market opinion swung to one side, especially everybody and anybody started talking about impending US recession. In fact, I saw a chart which said that the number of professionals who've been predicting recession in US is all-time high. Right? That clearly tells you that what kind of market mood we swung to, and hence taking risk was kind of almost very very hard for anybody to take. So hence people were sitting most on the sidelines and a lot of people sitting on cash. But we've been kind of outlining our view for last few months consistently that look, India's story is very very good. US inflation has peaked out. uh, it's a very very mathematical situation that post Ukraine war, suddenly energy prices, food prices, and as well as commodity prices went up, and to anybody's expectation. And as a result of that, Fed was forced to react in a panic, right? And they saw a massive rise in the rate. But it is also a mathematical situation that when you have a high base and all the commodity prices, food, energy, as well as commodity metals have come down pre-COVID levels or there and abouts, at least definitely 2021 levels. So when a high base and constituents are coming down, inflation will come down. Whether it will come down in January, February, or December is anybody's guess. Depending on where the base is. But so our hypothesis has been as that base plays out, Fed will get comfort in that data and be not as hawkish as they have been in the past. And 75 basis to 100 basis point of rate hike is already baked in on factored in the market expectation. So any positive surprise to that can also trigger a market rally, or any dovish commentary by Fed can also trigger a market rally. So I don't see, Fed will be killing the US economy. They will be, their objective is to get the inflation under control, which I think should be around. So interest rates will kind of also peak out. US dollar has peaked out. So these three triple peaks, whenever they happen, go back and check the 40-year history. Whenever they have happened, it has always been followed by, flows towards emerging market. Emerging markets see massive outflow when the interest rate starts going up in US, when the dollar starts becoming strong, when so whenever they start happening, they see outflow. But the moment they go to peak, it starts coming back. So our call has been that 2023 will see a massive portfolio flows. So if you see the twin engine of liquidity and earnings, which practically drives the market, right now both are looking good, right? Liquidity is looking good and earnings are very well placed, at least for Indian markets, right? I mean, your major constituents of earning is banking, IT, auto, telecom. Most of the, except probably commodities, you won't find any sector which is not contributing to the earnings growth. So whether it is 13% growth or 18% growth, depending on whether you are pessimist or optimist, but I think 14-15% growth is very much on the cards. So where do you have 15% growth supported by liquidity? Now this kind of setup, whenever it's there, markets are bound to do well. So this has been our core hypothesis why we've been positive on the market, and it continues to remain.
Interesting. Because do you reckon that the base could broaden a bit? Because thus far the rally seems to have been a bit narrow. I mean, save for what happened, say yesterday or thereabouts, and save for select pockets of PSU banks, the move has largely been narrow. Do you think it broadens out now? Maybe the market could consolidate or move up gradually after having moved so much. But can the base broaden?
See, it will have to broaden. It is broadening. I actually don't think that it is very narrow as well. See, please understand, sometimes we get feeling of narrowness when there's a sector rotation happening. Please understand, in last 12 months, IT gave away a lot of it, but financials gained it. Last year, financials didn't participate. IT and other sectors kind of really did well. right? So many times, if you are not part of that, you feel that it is sort of narrow. So if you are on the wrong side of trade or wrong sector, you will not get that sense, right? So I know a lot of people talk about it, but I really don't think it is very narrow. I mean, today if you see, financials are doing well, IT has started doing well, automobiles are doing well, telecom is doing well. So I think pretty much, like again I said, manufacturing is doing very well, capital goods companies are doing very well. So broadly, entire industrial space is doing very well. Most L&T kind of players are doing very well. So earning growth is reasonably around, right? So and all stocks are doing well. So now Reliance did not participate. Now Reliance is participating. So there is always going to be some lead. Last year Adani participated. This year probably they may not participate. So all those things will happen, right? But the fact of the point is that I think India has such a broad-based, sectoral opportunistic landscape. Today, if you ask me, other than commodities, I'm kind of positive on everything. If you ask me, I mean, you
Wow.
can figure out that where the growth will not come. Now you have to pick and choose your bet, which between you understand, you find a good management team, and the risk reward is better off in your favor given the valuations. So you have to now choose from those setups.
Hmm.
Otherwise, India will by and large grow.
Got it. Now, viewers, I'll tell you something that I just realized when I was starting to talk to Vikas. Somehow he's been a very early identifier or two or three major trends in the last 2 or 3 years. Carnelian, I mean, very early identifiers of technology, much before everybody else was talking. Their shift strategy, very early identifiers of the manufacturing boom. And I tweeted this out yesterday that the Swiss chocolate maker is making the third factory in India. Skechers is moving production to India. The party is just starting to begin. Because before I talk about the party, which is manufacturing, let me ask you about where is it that you are now constructive on and where you believe you may be slightly early in the cycle, but you see that happening in the next 2 or 3 years. Is there something like that?
So I think banking is clearly on that, in my opinion. Now I think while banking stocks have done well in this year, but I think still we're in average cycle. So you can, in some sense, since you mentioned IT, probably I can say we are probably in December 2020 of IT. So whole of 21 did well in IT, right? So I guess banking, in my opinion, at least if not more, 4 to 6 quarters of a great run ahead of us. Very simple, earning growth are coming by. NPS or credit quality is very good, so no NPS cycle. In fact, most banks are having write backs. So credit growth, write backs, and positive momentum in the favor of sector. And when the liquidity comes, it will go to the sectors which can absorb the large amount. And banking is the one sector which can absorb any amount, right? So I think I again see that as a sector will continue to outperform, and we have very large weight on the financials right now in our main fund. We're almost close to 40%, which is a very big conviction, bet we have taken.
Okay. Now, manufacturing, Vikas, but I mean, company after company, I see announcements every fourth day on my website, on the Bloomberg terminal, about some more global company deciding, okay, let's talk about India. Now, compared to our size, maybe the announcements are far and few relative to maybe some of the other countries, but we're getting a bunch of companies starting to come in again, I think as is the market broad and the banking is broad in markets, India is a broad country to absorb so many flows. What's your sense of how to make money to capture this manufacturing renaissance, if you will, in India?
अभी तो पार्टी शुरू हुई है, so
Uh-huh.
it's a long way to go. So
True.
I mean, very often investors make a mistake that when stock doubles, triples, that array bahut ho gaya, right? But when you look at a 10-year trend, the example I like to give, I have seen in front of my eyes Sun Pharma's market cap from 1,000 crore to 3.5 lakh crore. L&T's market cap from few thousand crores to almost 1.5 lakh crore now, of course, in the last cycle. So whenever cycle favors, I have seen company like Aarti Industries from 400 crore market cap to this, SRF from 400 crore market cap to 70,000 crore market cap. So I have seen this journey firsthand. So I always believe that big money is made when you capture a long trend, put money behind that, and stay put. There will be intermittent cycles, there will be painful periods. No business is smooth on a regular basis. But point is that when the tailwind comes, it is very clear that China plus one is going to play out. Especially, India has got its own advantage. Government is focusing. So combination of import substitution and China plus, which is exports to other countries, plethora of sectors will open, which we have not even seen today. For example, I give toy manufacturing. Today, where do you play? But toy manufacturing is a very big opportunity. India is beginning to see. Garmenting, India is beginning to see. We are minnows. We are $2-3 billion, or maybe I mean, China is 35% market share, right? So India can go through. But what happens in manufacturing? It takes time to build. So if you take a 3, 5 year, 7 year view, I'm telling you, we will be finding many companies with 1 lakh crore market cap, 2 lakh crore market cap, in the same space, because we can see the same thing happening in China, right? So, like I give you an example, when I did IPO of a company when I was with Edelweiss called Umber Enterprise, they are India's largest air conditioner manufacturer, right? Now, most people did not believe in manufacturing then, but they are competing with China and delivering here. The stock has from that time almost, I think, from 15, 1600 crore market cap to gone to 10, 11,000 crore market cap, which is, by the way, less than $2 billion. But their competitor called Gree in China is a $40 billion market cap company. Now, point is that I'm not sure whether that will go to 40 or not, but at least you know the journey, right? That you can extrapolate in practically in many sectors, in many companies. Of course, it does not replaces the need to identify right entrepreneur and the segment. So I'm not saying that, but I'm just saying today when this kind of trend starts, and we have seen many such trends. Many people in mid 90s IT was there, right? Most companies were 1,000, 2,000, 3,000 crore market cap.
Yeah.
Right. Then we saw pharma rally happen. Then we saw entire industrial rally happen in 2000s, where Bharat Forge, Thermex became from 400 crore market cap to 10,000 crore market cap. So all those things are very much possible. And mind you, this kind of setup from a business environment perspective, I don't think India has ever seen before. A supportive government, a demand environment, a solid financial situation. First time in India, the cost of capital is cheaper or almost comparable to the Western world. Now that's such a big advantage. We ignore. I mean, cost of capital has been our biggest pain point all along. Today, our cost of capital is one of the cheapest. Now that goes into a very big building a competitiveness. So we have a cheap labor force, we have a cheap capital, we have a great entrepreneurial skill, we have a local domestic demand. What else you want from a manufacturing point of view?
That's true. Because
I can go on for 2 hours on this. So.
Yeah, no, I can continue for 2 hours as well. Completely fine. We don't have a show after this. But here's the question. Where is it that you find? So one is the steady gains. I mean, banking is a great play, right, for making gains. But I mean, the street is kind of parked there. Almost everybody that I talk to, everybody of your peers, all of your peers are kind of there. I want to understand where is it that, for example,
in between I lost you.
Sorry. Can you hear me? Can you hear me?
Yeah, I can hear you now. Sorry.
Now I'm saying a lot of your peers are also parked in banking. So in some sense, it's a bit of a consensus call. Again, manufacturing may be a consensus. Where you might be anti-consensus is that because most people say that you don't know that the investment will become a multi-bagger and unless it becomes one. But here I hear you say that you believe that in some cases the runway for growth is probably of a multi-bagger one. Whether the company does it or not is separate. So my question to you is, where is it that you believe that there are potential multi-bagger opportunities? Where you, and not in 1-2 years. I'm saying over this decade, these companies could grow maybe 5-10x. Where is it that you see these opportunities the maximum?
Multiple sectors. One, of course, in the entire chemical API specialty chemical space, which by the way, this year has been very down. And probably there's a time to come and look at that in next, 1 or 2 quarters, right? Last year there was a fancy, but this year nobody wants to look at that. But that's the time when you should look at it. The whole, in my opinion, garmenting space is a very, very big, interesting space. India has the edge. India has the ability. That's going to come out very, very well. Whole capital goods and engineering space. Again, there are many places where India is doing well, both from a local capex cycle as well as exports. Both are doing very well. Auto components, defense, building materials, industrials. So I can go on again, and I'm telling you, newer and newer segments are coming. Please understand, manufacturing is such a wide sector, and especially if you can find a niche player, who's very good, in his capability, who has a customer base. When tailwind comes, his ability to expand and grow is far, far bigger than a new player. So those are the kind of players will do well. So in all of them, you will find who believe defense can be very big. 3 years ago, 2 years ago, Today, everybody kind of believes it. So somewhere, we try to be a little cautious when everybody starts believing it, right? So that's the time you have to kind of start seeing the risk reward is slightly not tilted in your favor. And markets are so good that it gives time to everybody. It's like this last year, everybody was feeling out that if you don't buy chemicals today, you probably won't be in the market. And this year, same stocks are available half the price, right? So markets, one should not have left out feeling. If there's a euphoria, sit tight, don't do anything. But in the even a broader run sector, it will give you opportunities. So we keep on looking at companies, businesses very clear. Many times we like a company, but we don't like the price and we just sit tight and it gives us opportunity at right point in time. So investing is again a very, very exciting field where you can kind of explore yourself as much as you want.
Yeah, that's true. Because one quick follow up on a very small space, but which is starting to see some material announcements. And I know that we've spoken about 7, 8 years ago about what was happening in the railway manufacturers then. It's been a long haul until then, nothing's happened. Now these guys are seeing some major investments from the government. They're also venturing into some of the other things. Just today, I saw the announcement in the Times of India about 5 companies having made a bid for a large railway tender worth 36,000 crores, which included a Russian company, included some other global companies, but included the Indian small names as well. Is there some change here that could be tangibly happening, or is it too early to be able to decide on that?
So definitely, I think railways is a very, very big opportunity. Government is also making massive investments in the whole sector. While I think when you are involved with the government, at times it can get delayed, and that's the reason in the past, a lot of delays and so whenever market expected didn't happen, and hence there was a lot of skepticism. But there's no, I think from the current railway minister's commentary, government's commentary, they're very clear that they want to continue to push the investments and that upgrade the entire railway. I mean, this whole Vande Bharat Express is, they're beginning to. So I am told that there are some hundreds of Vande Bharat Express planned. So if those things do happen, of course, it will be an opportunity. And why should you not? I mean, India as a country is upgrading. First time I like that this government is not saying that we are a poor country. Government is saying we have no resources shortage. We have to get it executed. And when you have that kind of mindset working, and mindset is of the speed, a sense of urgency is there. Anything what you do, whether it is airports, whether it is urban metro, whether it is railways. Today it is actually, I don't know when you traveled last to in railway, but I travel often. It is delight to travel in railways, right? They run on time. You get minute by minute update whether you are late or not. Its cleanliness has gone miles. By miles. I mean, in a 4-hour journey, your train gets cleaned twice, which is it is not what we have ever anticipated in India, right? But it has got done. So I think government is doing a phenomenal job in terms of putting those building blocks of growth driver. And when there's ample opportunity for everybody, then everybody is happy, right? So nobody's complaining. So hence today the mindset of the businessman and industrials, everybody's happy. And when everybody's happy, your animal spirits are back, and you get back to investing. And that's the reason we are seeing companies, entrepreneurs are beginning to start committing capital to India.
True. In fact, interesting you mentioned the Vande Bharat Express, because I think that's the story about 5 major players having put in bids for manufacturing 200 Vande Bharat trains. That's the one that I was talking about, which has some Indian companies as well. And I recently went to Ranthambore by train, Vikas, and the experience was quite lovely, really.
Absolutely.
So quite stunning. Great. Because we can go on and on, but understand you have possibly your time, your clients' money to manage. So we'll leave you at that. But thank you so much for joining us today. Lovely as always talking to you.
Thank you very much, Niraj. The pleasure was entirely mine, and it's always great to chat.
Thank you. And viewers, thanks for tuning into this edition of The Talking Point.